What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Lindner. I am live streaming on YouTube, Rumble, Twitter, and Telegram. I have noticed I've been being shadow banned on Twitter, so if you're watching there, please retweet, give it a heart or a like, and hopefully other people can find it. Okay, today is Monday. Happy Monday. We made it. I'm here in Florida dealing with this Debbie situation, but so far, just some real light winds and some rain. That's it. We're not getting hit that hard. So thoughts go out to everybody that is getting flooded in Central Florida. All right. Big day on Monday is fundamentals report day. Let's go ahead and share my screen and we'll jump right into it. I've been doing this fundamentals report for a long time. You can find this for free. Go to bitcoinandmarkets.com, sign up for the free weekly newsletter, and it'll come to your inbox every day, as well as I'm doing a bunch of posting like these Bitcoin minutes and macro minutes. Those will come out pretty much daily. I also do these live streams. So, okay, let's go into the fundamentals report number 299. Been doing it for that long. Holy cow. This is a report that goes over all of these different sectors of Bitcoin, headlines, macro headlines, price analysis, mining, layer 2, and at the end, I moved my previous post down there so you can continue reading. Okay, let's go through a snapshot of Bitcoin. Weekly trend is panic. Panic in the streets. And what are you supposed to do when there's panic in the streets? There's supposed to be blood in the streets, but when there's panic, that's a pretty good time to buy. So we will be going over price. We'll be going over what I think is going to happen here over the next few days. Moving on, media sentiment is positive. It's down from very positive last week. And this isn't scientific or anything, but just what I see out there. People's view, or the mainstream media or mainstream financial press's view of Bitcoin specifically, not of Bitcoin's price movements, but Bitcoin as an investment and all that. So it's still positive. Network traffic is very low. We'll take a look at the mempool, record difficulty, and all of that. Mining industry is surging. Weekly price down $14,000 since last Monday. That's 21%, down to 53.18. Market cap held at 1.05 trillion. And I did not add that, I don't think, to this report, but the market cap went down, went slightly below 1 trillion. And then bounced on that a couple times, and now it's above that. So 1 trillion might be kind of like 100 billion was back in 2018. And we were saying, oh, it's not going to go below 100 billion. That's the new floor. And of course, then we had the big breakdown from there. But we were talking about it significantly as a market cap, a round number market cap being support. And that is what we see developing here. 1 trillion as a market cap being a round number support for the Bitcoin price. Satoshis per dollar, 1882, and 1 finny, that's 1/10,000th of a Bitcoin, is $5.31. Mining sector, you can see huge adjustment several days ago, 10.5%. It's not the biggest adjustment, but it's the biggest adjustment in a long time. Miners are very, very bullish out there. Next estimated adjustment is in 8 days, and it's supposed to be negative 1.5%, but we'll see if that increases. With this price dip, we'll probably see some hash rate coming off. So this could get lower. If we recover in price, maybe this doesn't even get negative. We'll have to see what happens in the next 8 days. Mempool down to 124 megabytes, continuing to clear out. Fees very, very low, 37 cents or 5 sats per virtual byte. Low priority fee, save just a little bit, down to 30 cents. Lightning network capacity. This number floored me here. We lost 243 Bitcoins out of the Lightning Network, down 4.5% in capacity when measured in Bitcoin, and even more when measured in dollars, right? If the dollar value of Bitcoin is dropping, it's going to be even more of the dollar value capacity in the Lightning Network has disappeared. Channels is under 50,000, down 1.2% from last issue. All right, so that's a snapshot of what's going on. Let's get into some more specifics with the headlines. Now, headlines. First up is last day of the August price forecast comp. So, if you guys are paid members on bitcoinandmarkets.com, $5 a month, you can enter the price forecast competition. You make a forecast for the price at the end of the month, and the closest person wins $20 in sats. So, it's a great way to support the content, have a little fun trying to guess the price, going against other people. And yeah, so check that out. That's one of the perks for the members, $5 a month level or higher. Okay, next up. Oh, and today's the last day. So you got to get in there. If you want to do this month, you have to sign up by today and get your answer in. All right, everything is crashing. We'll cover most of this below in the macro section since it's not primarily a Bitcoin phenomenon. Suffice it to say here, Bitcoin is down big on the day. Volumes are through the roof. People are lamenting the bull market is over. Panic is in the streets. It's a great time to buy the dip. There's panic when there's panic in the streets. Okay, it was Circle behind the year's worth of Tether FUD, and they employed FTX to help crash it. It was my firmly held belief through all of those years that Circle was behind much of the Tether FUD, because their CEO Jeremy Allaire is a sworn enemy of Bitcoin, and he had a rage quit early on in Bitcoin, and said it was going to fail and all that stuff. Then he comes back with a stable coin, and right as Circle's getting going, that's when all the real FUD for Tether started. But they also FTX also had a stable coin. And it looks like they joined forces here. So at the conference, Howard Lutnick, CEO of Cantor Fitzgerald, this is what he said. Actually, let's just play this. Let's get my volume up a little bit. We'll just play this video if this works.
So I'll give you an example. In May of 2022, Sam of FTX had obviously done a deal with Circle, right?
Jeremy Allaire.
And he sought to try to destroy Tether. So he amassed huge amounts, $10 billion of USDT. And then in May of 22, redeemed it all in 2 or 3 days because he assumed they wouldn't have the liquidity. But we had not announced to the world that we were holding Tether's treasury yet. And we met 10 billion in redemptions instantly because it's no big deal for us. We deal in trillions of treasuries. It's nothing for us.
All right. So I knew it all along that this was Circle, Jeremy Allaire, little enemy of Bitcoin there, and FTX also trying to crash a competitor. And then, of course, they blow up just months later, 6 months later. Okay, next headline. Strategic Bitcoin Reserve Bill was introduced in the Senate. The bill was introduced on 31 July and is now off to committee. Many letters have been flowing to Congress members. Below is the running total so far. You can see many letters. This is over 2,000 letters have gone now from people to Congress members about this bill specifically. And you can follow that. Dennis Porter on Twitter has been tweeting about that. Okay, next headline. MicroStrategy buys $2 billion more in Bitcoin, or they're going to buy it. They've announced that they're going to be buying it. And they might be stacking this dip hard. I don't know what the timing is, but they have said they're going to buy $2 billion more. And Saylor wants to buy this dip. Okay, so that's all for the Bitcoin news. Let's get on to macro. Japan raises rates and triggers meltdown in their stock market. Now, last week when I was doing the Fed FOMC reaction, I did mention about Japan very briefly, but this has turned out to be a much bigger deal than I anticipated. So this whole panic started when Japan raised rates as yields around the world are coming down. So the difference in the carry trade is borrowing money in Japan and buying foreign assets. So you need that differential. But if yields around the world are coming down, like we've seen in the United States, and yields in Japan are being pushed up by these rate hikes, then that carry trade starts to not make sense anymore. Now, I don't know if there's people actually being squeezed right now in this trade, and that's why things are crashing, or if they just anticipate that it's going to be causing these problems. But whatever the case is, the Nikkei has dropped 20% in 3 days. It's pretty crazy. Their RSI has also reached a significant low, signaling that we could be near a temporary bottom. So we can see here on the chart, BOJ hikes, the Fed hikes the same day. Let me see what date. Yeah, the Fed hiked the same day, just later because of the timing, and you can see that oversold. That is very, very oversold. The most oversold actually since COVID. And let's see, I put it on here. Most oversold since COVID. Then they also had another oversold period in August of 2015 and March 11th. So these are very rare to be this oversold. And most likely we are close to a bottom there. Okay, I say most stock exchanges are crashing along with the Nikkei, Taiwan, South Korea, the British FTSE, the German DAX, Toronto, and US markets all down big in panic. It is the Nikkei's biggest 2-day loss in history. You can see on this chart, 2-day loss, even bigger than the 1987 crash. And remember, they had their stock market peak here in the 90s or in 1990. So this is a very, very significant move. There is reportedly 20 trillion in the Japanese carry trade, where you borrow in JPY and buy higher yielding foreign assets. When Japan is hiking, only by 0.15%, because they were at 0.1 and they went to 0.25, and the global rates coming down, people are worried that this massive market is going to unwind. So, are you going to get steamrolled by 20 trillion, or are you going to try to front run? Well, that's what I think the panic is here. It's not an actual mechanical thing. It's the psychology of the market at work here. All right, continuing on, U.S. markets crash, broker firms go down. Everyone woke up this morning, typo, in the U.S. and raced to sell into the crash. Lucky for them, many trading platforms were down. People were reporting not being able to log in. Very convenient. So here's all the different platforms that were affected. But in perusing Twitter, I also came across this chart now. So we did have a solar storm, and there was a major area affected. And of course, this will be moving as the Earth is turning, right? So as we're hitting morning here on the East Coast, it is coming into this big solar storm. And that might be what's responsible for at least a few of these, or some of this problem that we had here. Okay. The market might retrace the whole gap by the end of the day now. Well, we'll see. We'll check the live chart here in just a second. Huge gap lower in S&P 500, battling back a little bit as people panic sell, even as people panic sell. So you can see that this is a positive candle. I have these different colors on here, but this is a positive candle. Opened here, kind of tried to sell off, and then was going back up. Let's take a look at that live chart now. Let me clean up this chart here real quick before I switch over. And switch over. So here's the S&P 500. And no, it's not going to recover today. There are some very large gaps here, but it is going to be a positive candle. Huge, move down, huge gap down, but at least it is a positive candle. So the panic has subsided slightly here, moving throughout the day, and we will see. It is closed, so maybe we can see the futures. Just a second. No. Okay, so that's that. Let's go back to the report. Next piece of news. So this is all like adding up to being panic. That's what I'm trying to do here, is build a narrative of panic. Berkshire Hathaway sold half their stake in Apple. Cash pile grows to $277 billion. News, damn, this is so many typos here. News hit the airwaves over the weekend that Berkshire sold half of their stake in Apple and stacked it in cash. This added to the market panic at the open today. So you can see this huge move to their cash, 277 billion. That's a very short headline, but just wanted to point this out, that this added to the panic at the market open. What does Buffett know? What does he know? Warren Berkshire is, huge cash position. He's obviously scared about something, and I mean, we found out that it panicked, but he actually helped increase that panic over the weekend. Okay, U.S. economic data signals recession last week. So this is some more data that is just adding to this panic. So bad economic data all week. We talked about this last week when we were doing the live streams. Non-farm payrolls was horrible, triggering the SOM rule. You can see 4.3% up from 4.1 when it was forecast to be 4.1. And here's the SOM rule. When it hits this line, which is 50 basis points above, the 3-month average is 50 basis points above the bottom 3-month average, then that's when it triggers. And this is what we're seeing right here. You can find that on Fred. Also, ISM manufacturing PMI was terrible. PMI in the U.S. has now been in contraction for 20 of the last 21 months. And I think we did talk about this on Friday's live stream as well. You can see just contraction. Not good. I mean, that's meaning recession. All right, so that's all these things that kind of added up to panic. And let me see if this last one is, yes, let's go to this one first, because this also added to the panic. The Iran is expected to attack Israel. And I linked to this post. I think it's a New York Times article, and it's archived. But let's just get up to speed on what's going on here. Less than a week after killing the top Hamas leader in Tehran and a top Hezbollah commander in Beirut, the entire Middle East is on edge. Fears of broader regional war have been mounting amid vows of revenge from Iranian leaders that have left Israel in a state of deep uncertainty. And it's also being reported today that Iran has warned neighbors that a strike is coming, and they have been clearing the airspace. So Israel hopes to pull the U.S. into this conflict. That is my firm belief, but I don't think that is possible. This administration will not fight against Hamas or Iran. The American people do not, that's a bad typo, do not have the stomach for war right now. We are in the midst of a vicious political battle with pro-peace former president in the lead and a pro-war, pro-Palestinian administration in power now. Iran knows this. Israel cannot give an inch. So they're really stuck. Israel wants to expand this because their kind of their strategy is always never give an inch. You always have to respond. You always have to escalate, because if they don't, they're going to get run over. They're going to get taken advantage of and run over. And so they have to do this. And Iran knows that the U.S. is probably not going to get involved. So man, this could really go deteriorate very quickly. I saw Trump, he was predicting that they were going to strike tonight in the U.S., overnight U.S. time. And we'll see if that comes true. But this is another thing that adds just to that market uncertainty, right? And causing this panic to increase yet more. All right, now let's get to this story. UK riots break out over the weekend. Elon tweets civil war. I'll be the first one to say that I'm not completely up to speed on this situation. I don't necessarily know how it started. I Googled it a little bit, read a couple articles, read some tweets and things, but I'm not following this situation very closely. But it seems that the silent majority, the rising populace, populism is rising everywhere, and they are mad over immigration and the recent election results. So it seems they have taken to the streets to riot, and the Muslim immigrants are counter-rioting. However, the police and the government are only going after the white protesters. So this guy breaks it down very well. I linked to this tweet to take a listen to that. And then this one is where Elon says civil war is inevitable when talking about what's going on in the UK. All right, so that's all my headlines for the day. Let me check the comments, and then we'll move on to price analysis. Comments. If you guys are watching on Twitter, jump over to YouTube or Rumble. Like, comment, subscribe. Like, comment, subscribe. I also just got on Nostr, so I'm going to be posting over there quite a bit more. I think I am shadow banned. I was talking to CK this morning, and he was saying that he thinks I'm heavily shadow banned, and I thought it was just because I took a break from Twitter for a long time. But yeah, I have 20,000 followers, and a lot of times only like 500 people view my tweets, and so I know that I'm pretty shadow banned. So that what can help is if you retweet my stuff, if you like my stuff, I appreciate all that. Okay, let's take a look at these questions here. Rafael says, Ansel, the dollar does have to coexist with Bitcoin, as you always have said. And I agree, because if we pay taxes in Bitcoin, then the government will have it. The dollar, what else do you say here? Will not want to pay taxes in Bitcoin and the government because they'll have it. Yes, the dollar needs backing, and I think that the U.S. is going to back the dollar with Bitcoin. There's some technical difficulties to that, and I'm not sure how it will exactly work, but it just makes sense. So the main reason behind why this happens, or why this will happen, is a overarching theory of economics. Okay. And that is that we went from an era, or right now we're transitioning from an era that had very high global trust in global institutions, in the United States, in the role of trade and globalization and banking and all of that. And in that type of environment, you can have debt-based money. Debt-based money works very well. And you want that because everybody wants inflation. And I know that Bitcoiners don't want inflation. Gold bugs don't want inflation, but really you do. Okay. If it can be inflated, it will be inflated. That's the golden rule. And so everybody will tend towards inflation. I mean, not on an individual level, but in a economy-wide level. So when we have high trust and we have globalization, we have expansion, and we have low credit saturation, low debt levels, then a elastic money like what we have now with the dollar is very good. But when that starts breaking down, credit doesn't work very well when nobody likes each other, when nobody trusts each other internationally, I mean, globally, with global trade networks. And so when that happens, credit money does not work. You will get just continuous recession or depression. And it'll only rebound when you go back to a money that people can trust. They don't have to trust you. They trust the money itself, right? I don't trust Japan, say, but I do trust the gold or the Bitcoin that we're using to pay. So that embodies the trust needed to pay back and forth. That doesn't work with credit-based money. So I'm not so concerned with the actual mechanics of how it would work. I mean, if I sat down and maybe talked it over with people, for a long period of time and went back and forth, we could hash out how this would exactly work mechanically. But that's not as big of a deal to me as the actual economics, just the idea of the economics behind it. So, and 6102 was not as bad as what most people think. I wrote a piece on it. Let's see if I can find it real quick. Yeah, it's right here. I'm going to share it into Telegram right now. I'm not sure how to share it into the chat through my streaming software, but the title is Why 6102 Won't Happen. Actually, let me just show it. Why 6102 Won't Happen. And so I go through all of this. Let's see. First, gold was not confiscated in the purest sense of the word. Every American was told to turn in their gold coins and paid $20 an ounce. So they were paid face value, right? So it wasn't necessarily confiscated in the pure sense of the word. It was compulsory and reprehensible, but people often have the idea that gold was seized outright without compensation, which is not the case. Second, not all gold was taken, not even close. According to this analysis from SD Bullion, 85 million ounces of gold were bought back, amounting to 27% of gold in circulation. So only 27% of gold in circulation was confiscated with 2102 or 6102. There were also quite liberal exemptions: artists, jewelers, dentists, collectors, gold used in industry. They were not subject to the order. On top of that, each person was allowed to keep 5 ounces or $100 at the time, roughly $10,000 in gold today. Okay. The reasons behind it are also often mischaracterized. Yes, the government wanted to print more money, but why didn't they just do that? Why did they have to confiscate the gold? The dollar was backed by gold in the Federal Reserve Act of 1913, which required the dollar be backed 40% by gold. However, by the time of the Great Depression in 1929, the government was running up on that limit to print more paper dollars to stimulate the economy in a recession. Love it or hate it, the gold backing, along with the Great Depression, was what drove FDR to issue the Executive Order 6102. Today, we simply do not have the same forces at play. The dollar is not backed by Bitcoin yet. We are not in a deep deflationary depression like the Great Depression. Most believe we are suffering from high levels of inflation. Back in 1933, a high percent of population held gold versus very few holding Bitcoin. Politicians and their Keynesian economists blamed the Great Depression on people hoarding gold and silver, lowering circulation and keeping the economy from recovering. FDR wanted to ramp up circulation of money again in an attempt to end the Depression. Today, the powers that be do not face the same limitations imposed by a currency backing. The current silent depression is not blamed on people hoarding Bitcoin. Confiscating Bitcoin would not allow the government to print more money. That's the key. Confiscating Bitcoin would not allow the government to print more money. Bitcoin is not legal tender and would not be subject to revaluation like gold was. All right. Another big difference between the 1930s and 2020s, as highlighted by Balaji in a recent tweet, that the 1930s was during an era of growing centralization of power for governments. It was behind the world wars. Emphasis was on competitive national industrial output and controlling the commanding heights in the economy. Okay. All these things are moving the other direction today. We are headed into an era of more decentralization. International order is breaking down. U.S. hegemony is waning, and the prominent political aim is to break the economy through cultural revolution, not fix it. They don't want to fix the economy. They want to break it. The modern elites want to humble the U.S. by keeping it dependent on international trade and the world dependent on the U.S. military. In other words, they want to avoid U.S. isolationism. The U.S. naturally sliding back from its hegemony is the opposite to the situation of the 1930s. Lastly, the elites are more dependent on the fragile financial system than the plebs, who don't have any money. The system, being credit-based and leveraged, is only sustainable with high levels of trust in regulators and other participants. Arbitrarily seizing Bitcoin would undermine that trust dramatically. So when you have a backing to your currency, you don't need all this trust, like I said. But so by doing a 6102, who cares if you undermine the trust? Because it's backed by gold. But if they arbitrarily seize Bitcoin, they would undermine that trust, especially because many billionaires and millionaires own Bitcoin. It has massive traditional financial products riding on it. The elites have more to lose. So those are all the reasons why we won't have a 6102. That came out back in January of this year, why a Bitcoin 6102 won't happen. But okay, let's get back to the report. And let me see if there's any other comments. Okay, I can't say your name. Sajad says, use a PowerPoint? Is that what you're trying to say? Nah, this is a free newsletter that I'm going through. All right, let's continue here with price analysis. Bitcoin charts, a ton of damage has been done to the chart. And it is just a sad thing to look at, guys. All of us in Bitcoin that watch the chart, I mean, this just looks really, really bad. We'll take a look at the live chart here in a second. People are making lots of comparisons to other major dips in Bitcoin history. I can't help but compare this feeling to the COVID crash. So let's take a look at this. We have these some of these moving averages we've been watching lately, the 20-week, the 50-day, of course, the 200-day, about to cross in death cross, and the 365-day, which we kind of just bounced off of. And this is the daily, and we were oversold in the morning. I wonder if we are now. Let's go take a look at a live chart. We're looking at S&P 500. Let's go take a look at Bitcoin. 54,627 right now. We'll bring up these moving averages again. My computer's running slow. And we'll throw in here the 365-day. So, oh, and I was going to check the RSI. Yes, it is still oversold. It would have to really rally hard to get out of that oversold territory. But that's what we're looking at. All right, back to the report. Death cross is coming up. I think it will happen in about 2 days. We'll see what the price action does. If we have a strong rally, it might be 3 days, but that's coming up. These crosses are historically bullish, believe it or not. Price trend tends to rally toward the Schelling point of the cross. So if you guys aren't familiar with Schelling points, what those are points of interest on the chart. Okay, just points of interest. Very simple. Very, very simple. And that's where you build your technical analysis, I think, off of these Schelling points. An example of a Schelling point is if you have 4 boxes and 3 are green and 1 is red, and you take 2 participants and you tell them to pick a square, and if they can pick a square without communicating with the other person, and if you can pick a square and you both pick the same square, you get $5. Which square are they going to pick? They're going to pick the red one. Why? Because it stands out. It's different. That's what a Schelling point is. Just something that's different, that attracts attention, and you expect others to respond similarly to you and attract their attention. So that's what these moving averages do, and I think what all TA kind of does. Some TA, like TD sequential or something like that, is a more time-based indicator, so it's more on psychology and waves of emotions and psychology in the market. But most of the lines and stuff you'll see on people's chart is all about Schelling points, in my opinion. Okay, 365-day matches closely with the 50-week, of course. Here's the 50-week. We're bouncing off that. And the 50-week, maybe 50-day more, is seen as like a 50-yard line in U.S. football. If you're, below it, you're in bearish territory. If you're above it, you're in bullish territory. So this is really bad development here over the last few days. Just very bad damage to the chart. Some people have pointed to this megaphone pattern. This is a well-known pattern that is often a continuation pattern. In this case, bullish continuation. And we can see this back in 2019. We had this megaphone and it broke up, of course. And now we have this megaphone here. What's kind of interesting about this is for a while there, back in like 2023, we were talking about what if this cycle is double like the last cycle was. The 2019 and 2020 cycle, it had these two distinct ramps, right? First, we broke out really quickly. It actually hit the 61.8 retracement Fibonacci, and then it went down. We had like a mini bear market here, and then we had a secondary bull market within this broader bull market. And so we were talking about, is that going to be the case today? So we were comparing a lot of this cycle to what it would look like here. And now, it's starting to look a little bit like similar here. We really ramped up, and now we're going sideways in a megaphone pattern, sideways and down. And we'll see if it breaks out and has this two-phase type of bull market. I don't know. I think that's interesting. All right. Interestingly, Bitcoin futures open interest has made a quick round trip from signaling a top to now signaling a bottom. The market has deleveraged significantly and is ready to lever back up as we bounce. So this is from Checkmatey on Twitter, and you can see all these spikes down here into the blue territory correspond with relative market bottoms. Okay, at least the bottom of an impulse here went a little lower. Bottom of an impulse, bottom of this impulse, and then the actual bottom. That's flashing again, and it's significantly stronger than it has been. So we've seen more deleveraging than we have seen since going all the way back into the middle of the bear market, like when Celsius collapsed or something. So this is a significant portion, a significant place on the chart to be paying attention. Okay, I say overall, this is a TradFi driven panic, not Bitcoin fundamentals. Supply is being squeezed and the bull market is still on. Things to consider. 1, oversold again on the daily. Number 2, support on the 365-day and 50-week moving averages. Number 3, a death cross coming in 2 days. And 4, the deleveraging of the futures market is complete and ready to turn back around. Taken together, it is likely the bottom is in. I'm expecting a significant bounce tomorrow and perhaps a week's worth of consolidation around 60,000 before a full recovery. But I am watching what is going on with Iran and Israel, which could cause further delay. All right, so that's the price analysis section. Don't forget, you can sign up for the, let me just go here real quick. You can sign up for the August price forecast competition. If you disagree with my price forecasting and you want to try your hand at predicting the price at the end of the month with a chance to win 20 sats, you have to be a paid member of $5 or more on the website, and then you can enter this competition. All right, back to the report. Mining news, hash rate and difficulty. I did not do any headlines. I was getting behind. There's so much happening today. I was getting behind on writing, and this is, I cut out the headlines from the mining sector. Usually there's a couple headlines, and also I cut out the layer 2 stuff. But let's get into this hash rate and difficulty. Hash rate has been exploding higher the last week, right after a monster 10.5% difficulty adjustment to an all-time high. The price crashes. So check this out. Look at that huge adjustment all the way up to 90 and hash rate surging, but then the price crashed. So this is surging as the price is crashing, which I think is pretty interesting. This should tell us that the dip will only be temporary. The deep fundamentals in the space, which the miners are exposed to, are very bullish. Mempool. The mempool continues to shrink, now down to 124 megabytes. Surprisingly, there is no sell signal from the mempool prior to this current dip, likely due to the fundamentals coming from TradFi and not Bitcoin directly. So usually when we have volatility, we'll see buildups like this, or buildups like this one over here. Even this one, we'll see a buildup of the mempool into volatility as people more and more urgently try to move their coins around. We did not see that on this one. So that leads me more and more to think that this was just a sympathetic dip because everything else was dipping. But we'll see how Bitcoin behaves over the next week. All right. And layer 2, nothing significant to report other than I have joined Nostr. You can find me at Ansel Lindner. Click this link. I'm not an expert in Nostr. I'm just trying it out for the first time. So follow me over there. All right, let's check the comments. Okay. I was wondering if it's the Plunge protection team, the selling being broken up today. Well, there is such a thing as a Plunge protection team. That's not a conspiracy theory. It was formed by Ronald Reagan back in the day. Usually it happens when it has been significant selling for a period of time and that the market is approaching some significant level. And they will have meetings. There'll probably even be headlines about people meeting at the White House or people having meetings, different Treasury Secretary having different meetings with people. So you'll see the headlines happen. I have not seen any of those this time. And I don't think the Plunge protection team has been very active at all over the last several years, at least. Maybe they were in COVID, but it is just a coordinating body to coordinate large buyers to buy. And that's a tradition. I mean, that's has gone back a long time, as long as there have been markets, probably, even going back to like early Dutch stocks and stuff. But back in the panic of 1907, I believe, and markets were seizing up and everything was crashing. And they had JP Morgan come in, and he was the Plunge protection team himself. He backstopped liquidity in the market and allowed it to recover. And that's one of the things that led to the Federal Reserve, which is supposed to be like a Plunge protection team. But they have been very silent over the last 24 hours. I would expect them to come out and say something. But yeah, we'll see. People are kind of expecting maybe there's going to be an emergency Fed cut. I don't think so. I mean, unless it keeps crashing. I mean, if it went down another, I bet those guys over there in Japan are like, please, they're on the horn with Powell and they're like, please bail us out. There's going to be more likely a bailout of the Japanese stock market somehow than an actual rate cut over here in the US. I think that would come first. Because Powell's pretty staunch that he wants this, he's not going to move. That he did do an emergency cut in COVID, but COVID was completely different. I don't think we've ever seen anything comparable to COVID in the history of the stock market. So I don't think this is going to cause him to do something. Now, the Fed is always late, and they might do a 50 basis point cut. Or even I was hearing people talk about a 75 basis point cut on the next meeting in September. That's possible. That's very possible. And actually, they tend to always cut. I went back and I think I replied to one of Nick Bhatia's tweets. And he was saying, I think they're going to cut 3 times or something like that. And by the end of the year. And I said, well, they always cut big at the first cut. If you go back to .com, I think they cut by, I should go and find that tweet, but they cut by something, I don't know, 1%. And then in 2007, 2008, they cut by first by 50 basis points and then by 1 basis point or 100 basis points. So that was a quick cut. And so I think they probably will do the same. They'll hold them too high for too long, and then they'll have a big cut in one of their meetings. It won't be an emergency meeting. Rafael says, thanks for watching and commenting on the Saifedean podcast episode in China. Thought it was interesting. Yeah, I wanted to did I do that on a live stream? I can't even remember. I think I might have just done that in Telegram. Yes. You say you wanted to know what I thought about a guy actually on the ground in China. He's, said he's married to a Chinese person and all this. You can find lots of people saying lots of things. Many people that were China experts living in China are very scared about what's going on in China. So that's just one guy. There's actually many fewer analysts out there that are pro China and pro like thinking they're doing a good job and that they have a bright future and stuff. I would say a majority of Chinese analysts, even the ones that have spent a lot of time there and all that, they're quite negative on it. Like think about, Michael Pettis. If you're not following Michael Pettis, it's Michael X Pettis on Twitter. He is a professor at Peking University, and so he's on the ground too, and he has a completely different take. So I was surprised on Safe's reactions as a very agnostic guy against free markets, but was a very good podcast episode to get some nuanced perspective. Oh, thanks, man. Yeah, Safe is, we owe him a lot for the Bitcoin standard. I have not read the fiat standard. I think I bought it on Audible, but I never even listened to it because you guys know me. We are not on a pure fiat standard. We're not on fiat money right now. We're on credit money. And Mises would agree with me. Mises would definitely agree with me. If I go here, let me pull up this post I'm working on. It's my macro thesis. And in here, I say, we don't have pure credit-based money. And here is this. Can I zoom in a little bit? So this is from Mises, and that's kind of hard to see. But over here on money in the narrower sense, we have commodity money, credit money, and fiat money. And so right now we have credit money. We don't have fiat money. So anyway, that's why when I hear Saifedean or saw that Saifedean's new book was the fiat standard, I knew he was going to get it wrong. And I haven't reacted to that yet. But yeah, ever since that, he's kind of, and then of course this October 7th stuff that happened, he's Palestinian, so he has different thoughts on the issue and all of that. And they're very anti-America as well. Many Bitcoiners are actually anti-America. And if you guys want that kind of content, you're not going to find it here. I don't think America's perfect by any stretch of the imagination, but it's better than most other places. And it's brought so much to the world, So yeah, that's what I'd say about that. He's very anti-American, just like Max Kaiser is very anti-America. But America made him wealthy. He got wealthy from Bitcoin, but he was wealthy before that as well. And he was on RT, and that was a Russian state show, but it was specifically targeted at Americans. All of these people are Americans, and that's some of these YouTube content creators that I watch. All they do is bash on America, but they're speaking in English, and I bet 95% of their audience is American. And so they don't get the irony of the whole issue, that it's, I don't know. Anyways, let me see if there's any more comments. Saifedean is not free market. Rafael, you say Safe is so pro free market. He's not. He's not free market guy. If one, he thinks China is like doing a good job, and two, if he thinks we have fiat money, because we don't have fiat money. But yeah, it is surprising that he's turned so far like that. But the Mises, or what is it called? The Misus Institute. They did not embrace Bitcoin. And I was bitching at those Misus Institute people way back in 2016, 2017. They're giving awards to people that are anti-Bitcoin, and they're having this, like their big conference, and they're just completely ignoring Bitcoin, which is the most Austrian thing to ever happen, basically. And they're just completely ignoring it. And they still do. Like, what's that one guy? Holzman? Is it Peter Holzman? No, I can't remember his first name. The author of The Ethics of Money Production. He is very anti-Bitcoin. And he's an Austrian. He's one of the leading Austrians. He's a great speaker, great writer. Doesn't like Bitcoin. So these guys are not pro-free market. I don't even think they understand a lot of their own arguments. Anyways. Okay. So that's going to do it for today. Actually, let me check Telegram, see if they have any comments. Live Stradamus says, yeah, Nostr is the future. Yeah, I'm going to try it out. CK red pilled me on Nostr this morning, so signed up, and I'm going to start posting over there. But okay, guys, thanks for joining me. Ansel Lindner, Bitcoin and Markets. Check out bitcoinandmarkets.com. And like, comment, subscribe, and I'll see you on the next one. Bye.